Nvidia numbers come out and the Dow Jones Industrial Average hits a fresh all-time high. And we're going to break it all down for you today on Buy, Hold, Sell. Welcome, everyone. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in sunny and hot Scottsdale, Arizona. And we have a very special guest coming back to Buy, Hold, Sell. We could not keep her away because she has so much to say. We actually dragged her out of Fort Lee, New Jersey at CNBC, and we said, you got to come on our show because our audience wants to hear from you. Barbara Doran, she is from BD8 Capital Partners. Barbara, welcome back to Buy, Hold, Sell.
Delighted to be here. Thanks.
Hey,
Tom.
wait a minute. That's the same background she had on CNBC. So you're full of crap.
You're messing the whole intro up there, Toby. So, Barbara, I got to talk to you, though. Nvidia comes out with their numbers. The bar maybe set just a little bit too high. The stock closed lower today. Obviously dragged down the NASDAQ as well as the S&P. But can this stock market survive without Nvidia's earnings?
I know. Well, there was even a watch party at some bar here in New York City.
Right.
I mean, it's been quite the event, because as we know, the last 3 quarters, they have just exploded on the upside. In the first quarter, when they did this, it surprised everybody. And so I think everybody's just been rolling the dice and hoping that that will be the case this time. Well, the numbers were not so bad. Revenues and earnings were up over 114%, 122%, but the expectations were very high. So I think what you're seeing today, and you will see some follow through tomorrow, will just be the hot money, the momentum traders, the people that really aren't in the stock for the long-term fundamentals, which remain, I think, very strong. I mean, we're still in the early innings of this AI trade, and competition is trying to catch them, but it'll be quite a while before they do. And they haven't even rolled out their Blackwell, and demand is off the chart for that product. So they have a lot of room to grow. And of course, that is always the question for a name like this. When is maturity? When does the growth stop? But I'll tell you, the enterprise, sovereigns, those are just beginning to gear up in terms of their demand and their needs. And that's going to pick up where the hyperscalers who are still buying billions of dollars worth of product, will continue easy, I think, the next 18, 24 months.
Todd, I think Barbara's been reading some of my stuff. Look,
Everyone is.
Look, I go back to like 1999 because Barbara and I were around. I don't know about you, Todd, but there was this internet craze, mania, and stocks would go parabolic. And I never heard, Barbara, the term parabolic stock move until really the craziness in internet, right? So when something goes parabolic, the people at home have to understand that there's only really 3 types of money in the market. One is an index fund that is market cap, and so every time money comes in, they buy X amount of stock. The second group are money managers like Barbara, people who are fundamental and technical driven, but they value things. And if at some point the value is extraordinarily high, they take some of their profits, half of their profits. But when the stock goes like that, yes, we call that the Viagra chart. It's 100% momentum. And today and yesterday, algorithmic trading today was 78% of all trades. Yesterday, it was 76% of all trades. And if you're a longer term investor, you're not a day trader, et cetera. And when you see a chart do this, that simply means that the algos, which don't know what they're buying, they don't know SMCI from a milk carton, but they're buying it because the momentum of programming they have says keep buying it. And you know what? As soon as it reverses, that little top outside tries again, fails, they all sell it. And that's exactly what we saw with SMCI, which, I don't know how long we've been doing this show. We started selling that in January because we bought it at $35, $40. It was $1,000. If you're sitting at home crying in your beer or your martini because you bought it when it was $45, when it got to $1,000, you didn't at least take your original capital back and then another 200% back, then guess what? Wall Street lessons, Todd, they're extremely freaking expensive. Mine have been always 7 figures.
Right.
And that's, so you got to know when you're in a mania, how to trade a mania. And what we are seeing, if you look at the New York Stock Exchange today, guess what? It hit an all-time high. Guess what? Out of the S&P 500, there was, I think, 394 ups, and the other one downs were 10. That's called, Barbara, that's the R word. rotation. You know, if interest rates are going to come down 50% based on the dot plot and based on our work, why wouldn't you be buying stocks whose earnings go exponentially higher when the rates go down or their sales go exponentially higher? That's a transformational macro event. That's what I do at the micro and the macro level. So I'm happy as hell. And I've sold some stuff today that was, I had a couple, losers in there. Now what you want to do is take those profits on those big profits and then wash some of the crappy stuff you have left over. If this is a taxable account, in my opinion, because when you save $1 in taxes, that's like a 50% return on that loss. So that's the strategy in a mania. And then it finally runs out. Everybody who can buy has bought. It's like Thanksgiving dinner, Barbara. You have the dinner, and then you snoop some leftovers afterwards, and then you have it the next day, and then finally you're like, I'm stuffed, man. Right. I can't eat anymore. I can't buy any more of this stuff. I'm overweight, all this shit, and now we're going through the digestion phase. Let's call it that.
Okay, Barbara, do you still think there's time to make money in this stock?
In Nvidia, yeah, I do. I mean, I think what you're going to see, you just have to let it settle here. We're at the end of August where traders are weighing, as Tobin just pointed out, so much is algorithmic trading. So you get a lot of volatility. And so the stock, as you know, just a few weeks ago in the sell-off on that Monday got down to about $100. And then it bounced right back, as did all the mega cap tech, which also tells me that there is still, plenty of room to go there. Problem is when you do, as someone said, you have these parabolic moves or things that go quickly, there will be profit taking. And you can just bide your time if you don't already own it and wait for a time to get in. But I think you're going to see this stock, Nvidia, much higher a year from now because the growth is not remotely over. And that's always the question, is it just a few quarters thing? No. I mean, as someone said, when you had the internet going on, that was a year thing, or even Cisco's often used as a comparison. Cisco outperformed for years before it didn't because all growth will slow. And that's what everybody's, paranoid all the time. When does it end? Of course, after 3 quarters, it's not over for Nvidia, in my view. So
yeah, no question. I mean, I don't know. You just made me think of JDS Uniphase, Barbara. They have these optical connectors that every Cisco router had to have an optical connector, and JDS Uniphase, total Viagra. I was doing a talk down at a money show, and I said, listen, does anybody here, is not taking at least half of your profits in JDS Uniphase? And some guys, no, I haven't done that. I said, well, stand up. All right, you're going to have a healing. Here's JDS Uniphase. Sell half of it, take that and put it into other really good growth stocks, and then come back next year and, buy me a cocktail. And literally the next year he came out and he bought me a cocktail. I mean, if you've never experienced this, I mean, this is old hat for you and me, but if you haven't, private people who, manage their own money, it's a dream come true and then a freaking nightmare.
You're right, because what I think happens, it becomes self-reinforcing. Oh, you bought it and it's going up and up and up. You haven't sold it, so you think, oh, it's just going to keep going. And you just have to have what you're talking about is what you've learned when you've done this professionally for a long time. You have to have discipline. And whether you do it by position size, you just trim it down, particularly if you like Nvidia, I think has more to go. But when you've doubled in the weighting, you have to take profits, no matter what your view is of the future. It's just risk management. And the same is true the other way. I think it's always tough, I think, for even professionals to know when to sell, because you don't want to trade. There's tax consequences. And also, when do you get back in? But the other opportunity is the other way. Obviously, like we saw in the COVID shutdown, in the market, collapsed. And that was clearly a buying opportunity. The stock market was up 2 to 3 times by the end of the year. Yes. Because the one thing always to remember, they always tell my clients is that when things disastrous are happening, whether it's COVID or it's 2008, there will always be a policy response, and the Fed will respond. Or in the case of COVID, you had both fiscal, Congress, you had that. So you just have to know that. You may not know the timing, but when things get clobbered, you can't be afraid, and chaos and disaster.
Chaos. I love chaos. I do too. But also what the average person investor doesn't understand is what forced selling is. So there's this thing called a margin call. And if you are run a hedge fund, as I did for years, and let's say your JDS Uniphase that you've borrowed 50% of the price on goes down 30% in a day, you get this phone call at 10:01 from the Federal Reserve desk, which says you need to deposit $28,000, or in my case, $2 million right now in cash. Otherwise, we're going to close out all your stuff. And the margin clerks, they really don't care what price they sell it at. There's two forces happening there. There's forced selling, which they have no control over because they're leveraged. And then there's people going, oh my God, right? The fear thing. That is absolutely the time. I mean, Todd knows we were talking about that during that period. One of the MLPs that we love that pays essentially $2.10 a year in dividend went down to $3 on April 1st, 2020, because MLPs are owned by consumers, not by institutions, and they just get me out of it.
Right.
And that's now a $28 stock. And then what we also do when it's horrible at the bottom is we sell put options, meaning that we sell if we can buy those stocks lower, but we get a huge premium because everybody's scared to death. And now all of a sudden, I think our tax basis on those positions is like a -$8 because of doing that. So there are ways to take advantage of blood in the water, fear, etc. Because you're exactly right. There's this thing called the Fed put. Remember, we used to say it all the time. Well, they always jump in, don't they? Right?
No, but the writing the put strategy is a very good one, as you pointed out, when stocks are low, and particularly volatile, or some of these mega cap names, because you do it on stocks you're not going to mind owning.
Right.
It does go through and you have to own it, and meanwhile you lock in a huge premium. So I think it is a good strategy, and I think you're right on the margin. I mean, if you're doing margin to trade, then you'd better really be careful and especially take profits and lower it. When you're going to do that. So, but, I think that's the problem with, retail investors when things are down and low. All they're seeing is that, oh my God, I've lost $500,000. Oh, I've lost this money. And, you say you have not lost the money. If you know what you're invested in, they are good, fundamentally sound stocks. You are not losing the money. It is an external event, the market. And usually it's like we saw what happened in 22. Everything got killed, stocks and bonds. And if you panicked, you sold at the low. If you by October, it gets pretty painful. Where every day and you're going, okay, I'm waiting because, I know that blah, blah, blah. You just have to be patient. And what I tell some clients, is I said, when we're in a major drawdown like that, don't look at your account.
Don't open it.
Just don't look at it, because to them, I've lost all this money. And I go, you have not lost the money. This is normal.
Yeah, we send out a text and an email, and it says, do not open for the next 5 days, because we're running the money, and I'm not, I'm not selling for a variety of reasons. Matter of fact, we're buying because go to your other point, Barbara. That you actually understand what the F you're doing and why you're in a stock. When it goes down, you should want to buy more. The last thing you'd want to do is to sell when in fact you have an investment thesis that is, 2 years, 4 years, whatever, of solid growth. Earnings growth equals value growth. But a external event happens, and the market, this is a very technical term, shits the bed, and the world goes down. If you're not willing to buy then you should not be running your money. You should actually have somebody who understands this principle.
I think that's a really good point. That should tell you should not do it. So I mean, one other point I always tell clients, to come to, I said, look, if you look since the beginning of the stock market always recovers and it always goes higher. It may take time. We certainly saw that in the 2000 to 2002 time period, but it will always recover. So if you're in good names, not speculative, a biotech that if they get approval, it's going to double, and if not, they collapse. But so you just have to know that. And you're right about get professional money management if you just can't take the pain.
Right. Well, we're going to leave it there on that block, guys, because, lots to discuss. But what we need to ask Barbara is, how is she instructing her clients to position their portfolios? Should they be adding more on the tech side, or maybe peel back a little bit on those profits? But we're going to hear all about it, because today on Buy, Hold, Sell, we have Barbara Doran. She is the CEO of BD8 Capital Partners. So we'll be right back after the break. Please stay with us.
Buy, hold, sell, brought to you by CrossCheck Management.
Welcome back to Buy, Hold, Sell. Well, with us today as our featured guest is Barbara Doran. She is the CEO of BD8 Capital Partners. And when we left off in the last block, we were talking all about Nvidia and Nvidia's earnings and whether the markets can really survive any type of disappointment from Nvidia. But we have to ask Barbara because she's still bullish on the stock. But what is she telling her clients? So Barbara, tell the audience, are you telling your clients to add more in these positions or maybe pull back a little bit?
Well, Nvidia, I have pretty full positions for all my clients, so I don't need to add. But if I have new cash coming in, I might not take a full position today, but I would certainly be starting here because, I think the Fed should be cutting rates, but it's fully expected in another 3 weeks. Next week, as we've got the all important non-farm payroll number, which in July was a very nasty surprise on the downside. But looking at continuing claims and initial jobless claims and other data, it looks like it should be okay next week. Plus, we have CPI and PPI coming in, and that should continue the declining inflation narrative. So when the Fed starts to cut, that's and it's obviously the market is discounting a lot right now. But I think so. That there will be support under the market. So I don't see a lot more downside in a name like Nvidia, but you never know. But so you have to start a position here. But there's been opportunities that have come up, like a CrowdStrike. When you have these one-off, CrowdStrike and Palo Alto are two of the leading cybersecurity plays. And when CrowdStrike got crushed, it was down over 100 points. You don't know about, Delta's suing them. You don't know how it's going to affect clients, but it's a one-off thing. It's not changing their basic product and value proposition. So that I've been adding for clients, not full positions, but starting positions, in a lot of different accounts. And the stock is acting really well. Reported last night, the company, the CEO is a little squirrely about what they're going to do about it in the future, but basically, it's going to may hurt business in the short run, but not deeply, and certainly not for the long run. So there's opportunities like that come up. Or Apple. People have been waiting for visibility on that. Yeah, it's been a pretty full position for me, but I've been adding where I kind of making sure I've got a higher weighting in accounts that it may be a little bit underweight. And that's because I really am a believer in the upcoming product cycle. And certainly we heard some good noise today, and it sounds like Tobin, you're all over this too. But I think a name like that, which has been a solid name, they generate so much cash. And this upgrade cycle with AI, I think is going to be very real and have real legs. So I think that name could go a lot higher. So that I'm certainly upping the weighting in most accounts.
Yeah, I thoroughly agree. I mean, if you've known Apple for God knows how long I've been doing this, they're never first. I mean, they were first with the Macintosh and a mouse. Okay, but they're fast followers. They've always get it right. They get it so that they were not the first with the a phone, for crying out loud, but the iPhone changed the world. This new update is going to be, for instance, I don't know, Barbara, if you use Pilot, I just every once in a while I use all these AI things. It's the worst POS I've ever seen. It does nothing. I get more out of Gemini just asking a question in Chrome now because it's all connected, right? When Apple does AI, it is going to take. I'm just looking at notes here. I write myself notes and I send emails and texts and everything every day. It's going to give me, here's the answers you got. Here's what's still outstanding. Here's what you need to do. Awesome. Yeah. If I could say I never missed a phone call that I was scheduled for, then I would be, lying. So that sort of functionality is going to be. And then the other thing is that once you're in the Apple ecosystem, it's not ecosystem. I heard that yesterday. When you're in the ecosystem, then you have all these tertiary values that come to you, including I just somehow Goldman Sachs sent me an Apple credit card and said that if I spend X amount of dollars, I'm going to get 5% cash back, and I just happen to have to buy something for like 10 grand. So I get $500 back. Well, how did they know I wanted to buy something? Well, because I've been looking at all this shit for like the last 2 months. That sort of value, and Apple will get this right, and they're at the very low end of their valuation. And if people don't think that, remember, every one of these cellular companies, you get 4 free iPhones. If you change it, you get 4 for this, you get 4 of that. 80% of those new free, I just love that, free iPhones and iPads are going to be the upgraded ones. So
Yes.
the idea that people are saying that, this upgrade cycle is going to be slow. Well, unless you have a 300 credit score, you're going to get like 15 pitches from every one of the major players for free everything. Get the new 16 and you get AI and So I'm with you, Barbara. But actually, what I do is I've sold the puts for income, and then we buy the leveraged Apple ETF with call options a lot forward. So we enhance sort of the yield of just owning the stock outright. And that has, that works. When you get the product cycle right, it really works.
Which Apple ETF?
Yeah,
QQQ, that one, or you're talking about?
No, it's it's AAPL. It's a 2x leverage ETF. So it has call options. And so, I could put $100,000 into AAPL, or I could put $10,000 into the longer term call option and get 3 or 4 times the performance. And because the beta on Apple is so low, I'm not worried about it, dropping 40% tomorrow. And if it is, this would be my last show. So great to see that.
That's a key point, Tobin, to point out to people, is just looking at the beta of a stock, and how much it's going to move, and that it really helps you measure your risk and how, protecting yourself on the downside. Particularly if you're using margin, you should really be aware of that kind of the potential for extreme volatility.
Yes.
Beyond the normal.
We don't use margin for individual accounts. But we do sell, call option and put options, etc. And again, it's like the next, the question I always ask, because we have subscribers to our various research stuff. Would you buy more? If you would, sell a put option. It's going to lower your cost of you to buy it, and you get it at a lower cost.
So Barbara, let's switch gears on this because I want to have some time to talk about it. On monetary policy, everyone's talking about the Fed cutting rates. What are your thoughts? Will they be cutting rates, and are you looking for a 25 or 50 basis point cut?
Well, I think Powell has really signaled very strongly that they will cut in a few weeks. And it's for a number of reasons. One, after that initial surprise in the first few months of the year about inflation, it has continued to come down. We've seen that every month coming in, and the CPI, PPI in a few weeks shouldn't be a surprise, although it always could be, but it doesn't look like it. So you've got declining inflation, getting close to their target. Their real rate, staying at 5 3/8, it is now very restrictive, and different Fed governors and presidents are saying that. And so they need to do that. And you've got, after we had the payroll scare, people were like calling for emergency cuts, this sort of thing. But that also looks like it was a one-off thing, since you've seen, this morning, the initial jobless claims, continuing claims, are in order. So I think the Fed is, but they're also seeing, we have continued to see slowdown, consumer spending is holding up, but we are definitely seeing pressure on the lower income consumer, for instance. People are trading down, they're being much more value conscious, but we still have full employment, we still have good wages, but the Fed is now, it's a little restrictive. And that's going to be a big help when they do start to cut. It's obviously going to help housing in a big way. But the question is, I don't think they're going to do a 50 basis points unless that payroll number is a disaster, which I don't think any of us expect, but whoever knows, really. And so I think they'll do 25 bips, but then I think they're going to follow in those next 2 more Fed meetings before the end of the year, and they will probably do 25 bips in each, assuming the data comes in slowly moderating. And then on next year, because they're unnecessarily restrictive right now, and Fed has clearly said we don't need to get to 2% inflation before we cut, and we are much more worried now about jobs rather than inflation.
Ding, ding. By the way, bips is basis points. Not everyone speaks Wall Street.
Right. Thank you. Thank you.
Thank you, Professor. But back to on the jobs number, though, the news that came out last week that the federal government over-reported the number of jobs that were created. Do you think that actually swayed the Fed in past meetings to not make changes? I mean, had they known that we were not creating that many jobs, should they have cut maybe a few meetings ago.
Yeah, well, Todd, it is a good question, but when you look at the average, that it really came, that it was off. It wasn't so significant. Job growth was still really, was really healthy. So I don't think on the margin it would have, but it is an interesting question, But I think that the Fed was looking at a lot of other. They're just not looking at one data point.
Yeah.
So I don't think it would have changed.
I'd add in my economics 101 course from 150 years ago, which is that if you're going to call yourself a macroeconomic person, you take an average. You don't take one data point because there's no way to make a decision based on that. It's the trend of the average. And the second thing I'd add just quickly is that regardless of one's political aspect, there's about 7.5 million new people who work in the United States. And that's one of the magic parts of the economy that they can't measure very well. But you just look at the numbers of the economy, how resilient this is, how resilient. Those people spend every dollar that they get on rent, food, the basic necessities. And they're not going to Dollar General, obviously, to buy, tchotchke. They're not going to Five Below to buy a 32-cent, charm bracelet. But they are getting paid and they are spending exactly what they get in. They don't have credit cards, so we're not worried about them not paying their credit card. And that is a little secret part of our macro strength that I think people don't, admit, or politically they think, we should send them all back to Biafra or something.
No, but Tobin, that's a really good point, because there are a lot of jobs that weren't counted. And that's something that some economists pointed out, that actually, maybe the revision was not that accurate.
Yeah, exactly.
Right. So final question then. So now that we know that the Fed, they're making a move and we see all of that, but now you have the election coming up in November, and I'm not going to ask you obviously your political affiliation, but do you think Wall Street is favoring more of a Harris win? Because there is that feeling that you're reading about it in articles, that you have CEOs from the bulge bracket banks that would like to see a Harris win. If that is the case, though, do you still see the same type of economic policies that we currently have with the current administration, or do you see maybe something a little bit different that might put a little bit of twist and more of an upswing for the markets?
Right. Well, I think that it depends who's in Congress. Say that Harris got elected, it would depend.
Of course.
I mean, in the House, for instance, if it's a Republican House, again, the tax cuts, that are going to expire in January, they have some say in that, and so no, I think that Harris will continue the Biden administration policy. She's come out with some of her own, some things that I think there's real pushback, like this taxing unrealized gains. I don't think that ever flies. I mean, it just doesn't make sense. What happens the following year,
Right.
So do I
take a loss on my capital gains because
when you have an 02 year, and it's like, okay, give me back the money I to pay you.
Right.
So no, I think it will be continuation, and we know what Biden's policies have been, in terms of the fiscal stimulus, the CHIPS Act, and all this sort of thing. I think what you will see, and basically whoever's running, doesn't make that much difference for the market in the year it happens. And then actually in the years after, I mean, it does have an impact. I mean, you look what happened when Trump cut taxes dramatically for corporations and individuals. It really gave a big lift to the market. And everybody's trying to figure out, what does it mean for individual companies who are suddenly going to have, all this cash? So I think what happens, and we certainly saw this when Trump had just gone through the assassination attempt, followed right away by the RNC, the Republican National Convention, he had a real uplift. And you saw all this sector rotation to the sectors that would supposedly be pro-business, with less regulation, energy, the banks, this kind of thing. And then, of course, and green, anything green, went down. So, and of course, with Harris, you'll see a swing the other way. It would be, pro-green. Probably the two publicly traded prison stocks would go down, because under Obama, for instance, he said no private prisons. They have a much higher record of violence than government run. No federal prisons can hire private. And then Trump reversed that, and then Harris would probably reverse that back to what Obama did. So things like that. There will be looking at sectors, individual stocks, but it's not going to affect the overall market.
Yeah, so, I coming from the financial publishing world, I continue to get all the crazy shit, the texts and the emails, et cetera, that sell your stocks now. Fear fear and greed have always been the way people have sold this stuff. I am on overload on the people saying that a 45% market crash is coming because of regime change. Please, people at home, don't fall for that crap. I mean,
that's great.
It's just all they're trying to do is get your fear button going, and when you go in fear mode, then you act and do things you wouldn't normally do.
Right.
And so, I mean, it's like, how did we get all tribal here? Well, if you can watch certain television networks that I used to work for, you would get a dopamine hit every time they said how much smarter you are than those stupid idiots, right? And you're like, the average person on Fox News is 68 years old. And so they're like, man, this is the best thing that's going on. I'm feeling good about myself, right? Well, the next book I'm doing is called Dopamine Economics. Because honest to God, because
I like it.
People don't understand how easy it is to manipulate you, your person, yourself, simply by understanding what your biggest fear is, and then saying how that's going to happen unless you do this. And then they look nice and it's a nice television show and so, but in market, there's no room for dopamine. The only dopamine rush you should get is when SMCI blew up 45%, which we've sold 3 times and sold most of it $1,100. I buying SMCI. We bought we bought $2 million worth of SMCI today.
Yeah.
Because it's now a 12 forward PE, not a 45 PE. It's in a very good position with Nvidia. Yada yada yada. Yeah. But if you buy a stock and you're not willing to buy it lower, then I sell the position because you don't understand what you're doing.
Right.
You're just trading, the waves. And SMCI is, Todd, a perfect example of, I think, A, a stock now that is highly undervalued, that B, I can make a crap load of money, and C, I can take advantage of the momentum people who never heard of Supermicro ever before June of 2022.
Yeah.
And they still don't, because the algo just sees a certain number, buy. When it reverses, it sells. And there's only 79% of trades today were by those algorithms. I've said it 5 times now, but
yeah,
it
we
makes a huge difference.
Hold.
Yeah, right.
Absolutely. Well, listen, we're going to leave it there, guys, because this was a wonderful discussion, and there's so much to talk about in the next few weeks. Barbara, we have to have you back. Hopefully, we'll see you before the election, or at least soon after. We'd love to get your thoughts on the market reaction then, and we'll see what holds true and what we can look forward to in 2025.
And Todd,
it's going to be an interesting fall.
Barbara and I both wish you a rapid sleep, since this is the lowest energy I've ever seen out of you. I thought you were having a stroke. So.
Hey, Tobin, we got to talk much more. Not so bad. There's upside.
There's upside. I love it. She's an optimist, darn it. I love optimists.
There you go. Absolutely. Well, that's why we love having Barbara on the show.
Absolutely.
So on behalf of Barbara Doran and Tobin Smith, I am Todd Schoenberger. Be sure to check out this episode on BTT. And coming up after this show, you'll be seeing Janet Alvarez's new debut show, The Money Path, which will be right after we air this. So
no wonder you're so tired.
A lot going on at BTT these days. So thanks again for joining us, and we'll catch you next time. Take care.
Alrighty, thanks guys. Enjoy it.
Buy, hold, sell, brought to you by CrossCheck Management.